has been talking about Kotak's Fab 15. So we talked about a clutch of stocks before the break. Sanjeev, let me pick up the big outperformer from the banking space these past few days. PNB, almost a 20% rally these past 3 days. What do you like about that story?
So if you look at that bank, first of all, it's trading at about 1 times price to book now after the big rally which you have seen. And it's the bank which has delivered 18% kind of an ROE over the last 11-12 years. Next couple of years we are looking at those kind of returns. So why should this bank be trading at 1 time price to book if it is delivering growth and 18% ROE on a consistent basis? Yes, I understand there will be issues on NPLs increasing going forward, but that we have already built into our earning numbers. If you see, we are looking at something like 5% of gross NPLs by fiscal 2011. And despite that, we are looking at a stock which is still delivering about 90 rupees EPS in fiscal 10 and similar number in 11. And a stock which is available at 4.5 times on the price earnings basis now and about 1 time price to book. So I think this is a candidate for re-rating, and I think a lot of the banking space is probably due re-rating. If you recollect, we had this conversation on PNB, I think about 15-20 days back, where I said at 300 it didn't make any sense why the stock should be trading at 300. So hopefully that will be the case at 400 also.
I note that you've included Axis Bank but not ICICI Bank in your Fab 15. Though ICICI Bank on a price to book would probably be cheaper than Axis Bank. Is there more safety in Axis Bank, which is why you've included that in your call?
Yeah, because in case of ICICI Bank, the kind of news flow which keeps coming, that's slightly unnerving, and probably there's nothing much to it. But every time there seems to be some issue somewhere in the world, ICICI Bank seems to be there. I mean, no comment on the management over here, but it's just a series of events which is somewhat probably keeping investors back on the stock. Until the time you see some clarity emerging over there, people are not going to give any value for their overseas investments which they have made, and they have a pretty large book over there. So even we have excluded now any value for the overseas book. So it's about $6 billion kind of a number. So I guess the company is just suffering from the series of bad news which we are seeing, and over a time, as you see some more clarity emerging over there, maybe the stock will get re-rated. And I think the strategy with the adopters is just lie low for some time, just focus on the core banking business and clean up the books as much as possible. On the other hand, Axis Bank again is it's a company which has delivered reasonable amount of growth over the last several years. Still delivers pretty high ROE. If you look at the ROE, that's pretty similar to what an HDFC Bank delivers. It's about 17.5%, pretty similar to HDFC Bank. But if you see the valuation gap, HDFC Bank is probably about 2 times now. Axis is about 1.3, 1.4 now. Maybe the risk profile of Axis Bank will be higher because it's got more exposure to the corporate and SME segment, unlike HDFC Bank, which is more focused on the retail segment. So that could be the big, I guess, issue which is an overhang on the stock. But I'm not, that much worried about a big deterioration in the NPL cycle. As I was saying earlier, we are building in that. So for the 16 banks which we cover, we have increased the gross NPLs from say about 2.3% to some almost double of that by fiscal 2011. So we are building in that, but despite that, most of the banks seem to be doing pretty good on the earnings numbers and ROEs. So I am not too sure why should the banks be so much punished, for events which have not even taken place at this point of time.
We've talked in the past about real estate and how you expect to see prices come off much more significantly, Sanjeev. So what is it about Indiabulls Real Estate? Do you see the management actively doing that, or do you think they've got very valuable projects or properties?
So Indiabulls is a little bit of a different case from most of the guys, because remember they're not so much in residential real estate. And even if you exclude that portion of the book, it's still a reasonably valuable company, because the 45% stake which they have in IPIT, which is those 2 projects in commercial properties in Bombay, those alone are worth about 70 rupees on 2010 NAV basis and about 80 rupees on 2011 NAV basis. And as you see, that the occupancy levels in those properties getting going higher, you will see a re-rating of the stock to some extent. Also, it's sitting a large amount of cash, somewhere about 40 rupees per share. So between 2 properties which are almost complete, and I think in Bombay there is demand for commercial estate, and we have built pretty low rentals for those properties, you get about 120 rupees. Over and above that, whatever real estate they have in terms of residential projects plus the power projects, etc., that's all for free. So I guess this is a candidate for re-rating once people get more assurance on the occupancy numbers for these 2 properties in Bombay.
Quick word on Crompton Greaves, Sanjeev, and what you've read into that these last couple of days, because that stock's got punished really hard.
It's unfortunate. I think what the management could have done in this instance was maybe take shareholder approval. They did not as per the Companies Act. But in these kind of things, especially looking at what's happened in the market, in the mood of the market, would have probably a better approach to just approach the shareholders and take the approval. Because in this case, remember, they are anyway putting the money at book value, and it's not as if they are doing something which is unfair to minority shareholders. If the promoter is coming at book value and the minority shareholders are coming at some crazy value, then it's a different issue. But here everybody seems to be coming at the same price, and I think power projects in India ultimately will turn out to valuable. So I'm not questioning the profitability of the project going forward, and I think they're going to start simply 160 megawatt pretty shortly. So it looks like the project is pretty decent. They will eventually ramp up to about 1200 megawatts. So I am not too worried about the quality of the project. It's just the way it has been approached, which people don't realize. By itself, Mountain is a fabulous company in a fabulous business, and if you have this kind of company available at 7P now on 2010 numbers, I think it's a pretty good buy despite whatever has happened on this investment in the power project.
Sanjeev, always good speaking with you. Really great points on all these stocks. Appreciate you joining in with your report today. Kotak with their list of Fab 15. A couple of names that you haven't seen pop up in a long time, actually.
Yeah, Biocon surprised me, frankly. I mean, and good reasons, as Sanjeev pointed out, but that was a surprise in the list. But there were interesting points, Mithali, because, I mean, I think they have probably looked at valuations very closely, and this is not just a comment on the quality of the business, because even in the infrastructure space, there's no BHEL, because BHEL's valuations are quite stretched. So if it was about the 15 top businesses, then the list might have been quite different. But this was probably a lot about valuations and beaten down valuations, from which the percentage gain could be quite high whenever the market turnaround happens. And in that, the choice of a lot of underperforming sectors like metals, banks, infrastructure, I think are fairly well done. You may disagree with a couple of names out there, but I think it's a very interesting list.